All right, let's get right into it. Today we're doing a full-on autopsy of one of the biggest and definitely one of the fastest financial implosions in recent memory. We're going to dissect exactly how a crypto giant, once valued at over $30 billion, just completely vanished into thin air, and what we can all learn from the wreckage.
And this quote really just hits the nail on the head. The FTX disaster wasn't just about one company messing up. Oh no. It sent shockwaves through the entire crypto world, shaking the very idea of who you can trust with your money.
In this number, this is what it all comes down to. An estimated $8 billion hole where customer money was supposed to be. And we're not just talking about numbers on a spreadsheet here. That's real people's life savings, it's small businesses operating cash, all just gone. A truly catastrophic breach of trust.
To really get a grip on the damage, we actually have to start at the end, at the absolutely stunning speed of FTX's collapse back in November 2022. This wasn't some slow, gradual decline. It was more like a skyscraper just instantly imploding.
So, look at this timeline. This is basically the anatomy of a digital age bank run. It all started with a leaked document on November 2nd. By the 6th, fueled by a single pivotal tweet, it was a full-blown panic. In literally 10 days, a $32 billion empire was wiped off the map. This is what a crisis looks like when it's accelerated to the speed of social media.
So, with the company officially bankrupt, the real autopsy could begin. Investigators started a massive job of piecing together what went so terribly, catastrophically wrong, and what they uncovered. Well, it pointed to a complete and total breakdown of the most basic financial rules.
At the absolute heart of this whole mess was something called custodial misuse. See, when you put your money on an exchange, the expectation is that they're just holding it for you. It's still your money. But in this case, billions of dollars in customer funds were allegedly funneled over to FTX's sister company, Alameda Research, and used for incredibly risky trades.
This chart really shows you the night and day difference between how things should work and what was actually happening at FTX. I mean, look at it. Customer funds, supposed to be separate, but they were all mixed together. Risk management, there were supposedly special backdoors and exemptions. And corporate controls, basically non-existent. The new CEO, and this is the guy who cleaned up Enron, called it a complete failure unlike anything he'd ever seen.
So you have to ask yourself, right? With all this chaos going on behind the scenes, how on earth did FTX look so trustworthy, so invincible to millions and millions of people? Let's break down the powerful illusion they built.
By early 2022, FTX had this staggering market valuation. Now, a number like that doesn't just attract a few investors. It projects an aura of strength, of stability, of success. It basically screams, hey, we're a legitimate, safe place to put your money. And that story, that narrative, got a massive boost from some of the biggest names in all of finance. We're talking Sequoia, BlackRock. When these guys invest, it sends a huge signal to the market. It implies that the smartest people in the room did their homework and gave it a thumbs up. It creates this halo of trust that makes everyone else feel safe jumping in.
Then FTX took that trust and just blasted it into the mainstream. They spent a fortune on celebrity ads and sports sponsorships. You had Tom Brady, Steph Curry. They even had a Super Bowl ad with Larry David. This wasn't just marketing, it was a deliberate strategy to become a household name, essentially trying to substitute brand recognition for actual verifiable financial health.
And then you have this quote, which just rips that whole illusion to shreds. Coming from the man who oversaw the Enron bankruptcy, of all people, it paints this shocking, brutal contrast between the shiny, star-studded public image and the absolute chaos that was the internal reality of FTX. Now, a collapse this huge never happens in a vacuum. A failure of this size was always going to have serious consequences. So let's zoom out a bit and look at the shockwaves that rippled across the entire crypto ecosystem.
What happened next was a classic contagion event. First, a massive market sell-off as pure panic spread. Then, the dominoes started to fall. Other companies like BlockFi, which were deeply connected to FTX, got pulled down into bankruptcy too. And finally, all those elite investment firms, they had to write down their huge investments to zero.
But the real human cost was felt by over 1 million customers. And these weren't all professional traders. We're talking about everyday retail investors, small businesses that use the platform for payments, people who had their life savings or the money they needed to run their company just locked away, gone in the blink of an eye.
So, after going through all that, what can we possibly learn from this financial train wreck? It's not enough to just point fingers. We have to figure out how to turn this painful lesson into something useful, something that can maybe stop this from happening again.
This right here is probably the single most important question for anyone involved in digital finance today. The FTX collapse forced a really painful but absolutely necessary conversation about trust and safety in the crypto space.
So this basically lays out a simple checklist anyone can use, and it really all boils down to this. Demand proof, don't just take their word for it, check out who's in charge, test their systems with small amounts first, and, this is the big one, remember that exchanges are for trading. They are not your personal bank vault.
In the end, this entire FTX autopsy leads right back to this one timeless crypto principle. If you don't personally control the private keys to your digital assets, you are fundamentally trusting someone else with them. The FTX collapse is the most powerful and the most painful reminder imaginable that in this world, true ownership means you are in control. And that, right there, is the final critical lesson.